Hi friends, welcome back to the channel. This is your daily news. We're going to go over some headlines. I'll share my thoughts and get yours as well. So let's jump right in. Inflation eases to 5%, lowest in nearly 2 years. But you got to take a look at the numbers, which we're looking at right now. Core inflation is at 5.6, although overall it's at 5. Now, the reason why we need to go over this is because why is inflation, overall lower than core? Well, remember core does not include food and energy, whereas inflation overall does. And what's going on with energy in particular is that energy is down. You guys can see it here: pipe, utility, gas, gasoline, energy commodities, fuel, oil, energy services, etc. All of those things are down. Some of the things that were up big, this is month over month that we're looking at this chart, is airline fares and transportation services. Also, you got food away from home. Now, the thing that I want you to be thinking about is, where do you think energy prices are going to go as we start to head, into, spring, summer, etc. We head to travel season. My guess is that energy prices will most likely go up. That's my guess, because it usually happens. Also, too, we know that OPEC has been cutting. So keep an eye on these things. And I think with core inflation at 5.6, sort of the headlines, and I agree with this over on Bloomberg, U.S. core inflation slows only a bit, keeping Fed on track to hike. So word in the street so far is a 25 basis point rate hike. I think that's for the May meeting. And that's probably what it's going to be my guess. Because again, so inflation is down in terms of, was it the lowest in nearly 2 years, right? That part is true. But also understand that they're probably still going to raise because core inflation is up. And again, food and energy is not included in core inflation. So inflation overall may go up a little bit if, in fact, energy goes up. So we're going to keep an eye on this. One of the things that I want you to understand is that, one can't predict the future 100%. However, you can get a sense of sort of where things are going. If you take a look at this here, this is another chart, and it's fun to look at these things. It's the same as the other one, but you just see, different indicators of sort of like, okay, what does this tell us? So month over month overall, gasoline down negative 4.6. You also have used cars were down a bit. Again, we knew about this already. Transportation services are up. And this is actually going to relate to jobs, which we'll go over in a moment. But basically, I'll give you a little hint. If you want to be, say, an auto repair, auto mechanic is not a bad job/career choice to be in. I think that's going to probably remain in demand for years to come, to be honest. At this moment, we just don't have robots that can fix cars, like, you get an accident or any number of things at the moment. So I think your job is good to go. Year over year, you guys can see this. So this is sort of another way to look at this stuff. And you can see this is why I mentioned transportation services. It's up 13.9% year over year. So the prices are quite up there. And you also have shelter. That's why we look at more than one. Now, shelter is sticky. And also, too, remember, we've been keeping an eye on the unemployment rate, because essentially if there's, high demand for jobs, meaning that, how can I say, high demand for workers, meaning that jobs have to pay people more to come to work. Essentially, it keeps prices elevated, right? So this is sort of where we keep those things. And year over year, again, the biggest one here is fuel, but fuel may actually go up. So this is sort of where it's a bit tricky. And food does still remain a bit elevated. That's year over year, 8.5%. Other things to be thinking about as well. We talked about I bonds last year. It seems though the I bond rate's going to go down a bit, so they're not going to be as attractive as they were before. You're not going to lose your money on I bonds, but they're just not going to be as attractive. And they're saying here they're going to go below 4%, so around a 3.8, which is very different. When they peaked last year, when we were talking about heavily, I think it was like 9.62. I want to say is what it was. So that those aren't going to be as good as they were, especially when you're looking at savings and CD rates that are, 3-4%, things of this nature. And also, too, write in the comments. I'd love to hear your thoughts on what is the highest return that you're getting on just having a savings account or a CD. Love to hear, because people have different accounts out there, and it's always fun to hear what different ones that you have. We keep seeing this one over and over again. Essentially, articles are pushing the 60-40. So essentially, you got to have a mix of stocks and bonds. My personal opinion on this one is it's much more than just a 60-40 portfolio. You want to be thinking about paying off your debt. So if you have no debt, 60-40, but paying off your variable debt is going to be big, and also to making sure you have a job. That's why I always talk about all these things together, because if you don't have any income coming in, you're in a recession, right? So regardless of what CPI data says or anything of this nature, regardless of what's the best mix of stocks and bonds, you need to make sure you have a career. And also, even if you're, say, investing really, really well, if you're, swimming in variable loan rates, essentially, remember, like, for example, yesterday we talked about, there was a one guy, or I think he was a guy, we'll say a group, they were like, had a $230 million loan. It was like, commercial, multifamily resident properties. And it was like 4 of those units. And then essentially they failed to, pay on these things, and they were foreclosed. And so what I'm trying to say is that, like, if you're not managing money well in all facets of it, you're going to really, really struggle. And, this is something that is kind of obvious when you look at the headlines and news. This is sort of why I go over everything with you guys. I want to have a fuller picture. Like, for example, here, this is from Bank of America. U.S. credit and debit card spending slows to weakest pace in 2 years. So, you put the two together, right? Inflation is the, say, lowest in 2 years, but then also have spending down. And so we're going to be going into earnings, right, for various companies. I think, I want to say Tesla's like in a week or so from now. Like, it's going to be close. And Tesla's a popular retail stock. And sort of all eyes, Apple, these kind of things. But are people going to still be buying stuff? Because, yes, stocks do go up over a long period of time. But if a company comes out, like, say, for example, comes with a report, just recently we know that, say, their Mac sales were down 40%. What if they come out and report and they say, oh my God, like, our phone sales are down 50%, right? What does that do to their stock, do you think? So this is sort of why you want to have an idea of, like, are consumers, do they have jobs? Do consumers, have enough money to buy said products? And then if they are buying said products, are companies producing the said products at a profit? That's sort of like how this whole game works. So we got to watch everything. The other thing too, I want to I mentioned to you guys as well. I mentioned to this story, I think it was a couple of days ago already. It was kind of weird, and perfectly frank, and Elon Musk does a lot of weird things, but he labeled NPR as being, was it state affiliated? I think is how does he phrase it? And the sort of implication, or sort of, what's the right word to say? He tried to sort of paint NPR as being, government controlled, like, propaganda kind of stuff, right? So NPR is saying, we're not really, government funded, state affiliated. If you look more closely, NPR was saying, like, less than 1% of our money comes from the government. And so they're basically going to quit NPR. It's really interesting. NPR is going to quit Twitter. So my mind's a bit frazzled today, but NPR is going to quit Twitter. I quit Twitter, I don't know, it's like been 2 or 3 months ago already. You can do what you want with Twitter, guys. It doesn't matter to me. But I'm just saying this is something that is happening. And one thing that I try my best to do is get things, right, and in terms of accurate. And I want to show you guys this chart. If you've never seen a chart like this before, this is sort of like, where is media bias? And I encourage you, and I really do, I encourage you to try to, come by this channel. I think it's a good one. Also, too, if you are going to look at, bigger outlets, try to hang out with stuff in the middle, either slightly left or slightly right. I have no problem with that. But if you get to the far left or far right, just understand that those are closer to opinion pieces, which you can read whatever you like, but just understand that there are differences between outlets in terms of their, how much opinion that they put into something, and sort of like how much of a cheerleader they are, right? So the middle or center tends to be more just, hey, these are facts, this is what's going on. When you get slightly left or slightly right, you might have a bit of a bent, but they're not like to be making stuff up. But when you start to get, too far left, too far right, you might start to get into the making stuff up territory. So just be aware of that, guys. And I think it's good to, try to get the best truth you possibly can. This is a really interesting one. And I mentioned before, again, we always talk about jobs in this channel. This is the top 25 entry-level jobs for college grads in 2023. Now, this is according to Indeed. And remember the caveat here, these are entry-level jobs. So this doesn't necessarily mean top jobs, but entry-level jobs, okay? So if you're young people out there, you should take a look at this list. There's 25 of them for each either college grad or non-college grad. We're just going to look at the top, essentially 9, and we'll see what they are. So if you're a college grad, and this is in terms of sort of like, where are the jobs growing and where are those opportunity, they're saying, according to Indeed, outside sales rep, that pays $60K a year. Then you got transportation coordinator at 47. You got auditors, accounting people, tax prep, loan processors, retention specialist, network operations technician, and mental health case, which is kind of funny. I'm sure it's supposed to be mental health case worker, but it just sounds kind of funny. And then these jobs, out of all of these, sort of the ones where there's growth in terms of, there's openings. I guess network operations technician pays 85, and then the quality auditor pays 84. So that would sort of tell you if you're just interested in salary. I would make the case, though, however, is that Your job is much more than just your salary. You have your quality of life, be it the hours that you have to work, be it who your coworkers are, right? Do you like the job? So don't just look at salary. Yes, salary is a part of it, but do look at everything. What's interesting, because I mentioned the transportation services thing before. This is top entry level jobs with no college degree required. You got number one is inventory manager, and number two, auto body technician. And auto body technician, the mean salary is $82,000, which isn't bad at all. And so this is sort of why I was mentioning, people who are fixing cars, that kind of stuff. I just think that's probably going to be a high need. And you guys know this. If you want to get your car fixed and you got like a local shop that you really, really like and trust, you go there for years and you tell your friends to go there for years. You realize like, hey, I got a guy, over on 3rd Street, right? Everyone's got a guy. Yeah, I think these kind of things are something that's going to stick around. You also have, again, this is without college degree, environment, health, and safety specialist. That's an interesting job. That's at 65. That's probably a pretty good job. That might be a government job as well. Salon manager, that one doesn't pay as much. There is growth there. 41, but like we're not going to be, stop cutting our hair and these kind of things. And robots isn't really going to replace that, I don't think. Drafting tech, business analyst, sheet metal mechanic, which isn't a bad thing. And I want to emphasize very clearly, guys, I'm all about trade union jobs if you can get the job and if you have the connections to get into it. And I say get it and have connections because you do want to know who these people are, because it's not necessarily, if they are a union, not necessarily like, that easy to get into. However, my understanding is, and people who are in the trades, please chime in, is that they're screaming for good people. And I think that this has been, for any industry, obviously, someone who shows up to work on time, someone who does quality work, someone who's willing to learn, because, the people that they hire, the kind of work that you do, it reflects over on the company. And so obviously they're looking for people who want to, put in an honest day's work and get an honest salary. So trades jobs, I have no problem with it. And I mentioned that several times on this channel. Aircraft maintenance tech is also on the list, and then catering manager. So take a look at this stuff for yourself. Again, these are entry-level jobs, either be it college degree required or college degree not required. And you can do pretty well either way. One of the things that worth mentioning as well, and it's funny because we always talk about this stuff on the channel, these jobs maybe not necessarily not entry level, which I do think are good long term, with something like a cybersecurity, which I say over and over again. I think that's a field that we're just going to need for a long time. And we were just talking about, I think it was just yesterday, where the juice jacking thing, where if you plug in your phone in a like public charger, you have a chance of getting hacked. Like those kind of like hacking protection kind of stuff. I just think that's going to be future proof. And I also, anything with AI automation, this kind of stuff, if you're programming these things, repairing these things, this kind of stuff, I think it's going to be good as well. There's going to be a lot of stuff out there. I mean, nurses, we're never going to run out of need for. So there's going to be jobs out there as we go into, say, recession. But essentially, you need to make sure you have the skills and the, the things that people want to hire, and also have the connections to do said things. So that's why we talk about things holistically. So anyway, that's what's going on. Love to hear your thoughts on CPI or any other news that we talked about. Thanks for watching, and I'll catch you in the next video.